is Wednesday, October 9th. We have, if you didn't know, playoff baseball is going on, and I tuned in yesterday on my Apple TV. Yes, my house is completely covered with Apple TVs on, I think, the 9 TVs that I have in this house. But I tuned in, and it said, hey, baseball's on. I did not know this, that FS1, the actual app, the Fox Sports 1 app on Apple TV, you can get 4K baseball. And it looked amazing to the point where I could tell, you know, the on-field camera guy, they typically have like a barrier to protect the lens, like a plate. It needed to be wiped down. It had some fog or fingerprints on it. And I could see that. It was amazing. Again, the app was amazing. So kudos to Fox Sports 1. I think I was watching the Mets game. And F the Mets. Go Yankees. So whatever it is. I posted the newsletter yesterday. And if you're not subscribed to the newsletter, it's free. So it's 100% free. dailystockpick.substack.com. Just go and get it. It comes with some pretty insightful stuff like this SPY chart. Okay. And I pointed this out yesterday that SPY had an interesting level. And we saw this. Here's the July high. Okay. Right at 565. Where did we go up to? In August, we kind of touched that 565 level and then reverted back. And yes, there were reasons to revert back. And then we went forward and we went right through that old high. Okay. And then when you pull back right here on October 2nd, where did you pull back to? You pulled back to the low was 565.27. Now, October 7th, which was Monday, what's the low? 566.63. Support doesn't have to be to the absolute dollar or penny. Yes, if you're trading 5-minute 0-day options, you might need it a little closer. But if you're looking for simply entry points or directions of a market or identifying when to buy, you can identify those previous highs or previous lows as resistance or support. And if it holds up on support enough times, you can assume that we will be going for higher highs and higher lows. What does that mean? That means a chart that is bottom left to upper right. We are in a bull market until we're not. Now, from a weekly standpoint, that MACD is extended. From a weekly standpoint, the RSI is overbought. From a seasonal standpoint, we probably shouldn't be at the period where we're at right now. Let's go back. We'll go back to, say, 2010. And we'll go back January 2010. October, 60%. It's not one of the best months. It's kind of in the middle. But November is a good month. December is a good month. So you've got good months coming up, seasonality in SPY. And if we go and look at the Qs, it's very similar. But remember, the Qs are underperforming SPY. So we haven't touched that mid-July high in the Qs. We haven't. We've just been kind of floundering around between this 450 and 500 level. And the previous high in January was 503. You haven't got up there. Today, you're trading at 489. And we have some green candles. And you do have confirmation. Your Bollinger Bands have cinched up. Your MACD, it's just above the oscillator, crossing up. You're in already at 458. So you're happy if you followed the 4-hour algorithm. But, you know, the RSI, it's at 60. Trending up. If you look at the weekly on this one, again, we haven't hit that mid-July, and we've reset the MACD, so we could be going for a short-term pump. The RSI is at 60. Not really ideal, but it's not bad either. You know what's been good to trade is yin and yang. The degenerate way to play China. This is yang. This is the bear, okay? This is when China goes down, yang will go up. When China goes up, yin, YNN will go up, okay? This one had a cross up yesterday at 333, $3.33. You are up 8% today. This traded well on the 65-minute as well. If you want the 4-hour algorithm, if you want the 65-minute algorithm, you go over to Linktree, linktr.ee. It's this top link, okay? It takes you to, here's the pricing, $53 a month. $53 a month. If you're unsure of where the market goes, take emotion out of it and use the 4-hour algorithm. In fact, yesterday, I got a question from Fred on Spotify. Hey, Gary, my strategy for technical analysis is a 10-day moving average and a 40-day moving average. I assumed it's SMA, not EMA. The longer ones, you want SMA. Usually on my 9 and 21s, I'm using EMAs. But when they cross, he sells or buys. Can you compare this strategy with the 4-hour algorithm? And I said, my first response is which stock, which ETF, because I can do any stock or any ETF on my 4-hour algorithm. That's what you get when you sign up for Trendspider. I don't have your portfolio. My second response was, Fred, why don't you just buy Trendspider? I mean, set up that strategy. Whatever charting program you have, you should have backtested your 10 and 40. And whenever I say, hey, on Apple, my 4-hour algorithm makes you this, go and test your 10 and 40. You should be backtesting. My third response was exactly what I did. I set up this strategy, okay? I set it up and I tested it and I posted the video yesterday. The reason you should subscribe to the newsletter is because I will post not only the video from YouTube yesterday that you can get, but I will also post the strategy, the 10 and 40 SMA cross. And I will post it for you, Fred. So when you sign up for Trendspider, you will get this 10 and 40 SMA cross if you'd like. You can import it. You simply log in and import. But, just a spoiler, the 4-hour holds up really well. I mean, it really, really does. And I call this one the stock strategy battle. If anybody wants to send me their strategy and I can actually figure it out and put it into Trendspider, or if you have Trendspider and you want to send me your strategy and you want to battle it out on my 4-hour versus the 4-hour, have at it. Send it to me. I'll do a nice little video on it. But again, Fred, I would test your strategy because your strategy was a little bit suspect. But again, I don't know your risk tolerance. I don't know the time frame that you're trading this on. And I also don't know which stocks you're trading it on. So there's that one. Now let's talk about NVIDIA. They had their AI day yesterday, their AI summit. Is this ever going to stop going up? I mean, we're already at one of the largest companies, but NVIDIA unveils real-life sci-fi at AI Summit. It was pretty amazing, the stuff that they announced yesterday. I'm not going to say it's mind-blowing because it's NVIDIA and pretty much everything is mind-blowing. But it was pretty... Listen, they're getting into software, so there's a subscription portion of this. I do think that, I'll post a couple of articles so you can read them from Seeking Alpha. It was incredible, and it's up 1% in pre-market. We'll go and look at the chart. But what I want to point out is that this morning, Microsoft says Azure is the first cloud running NVIDIA Blackwell. When you get press releases from a hyperscaler and a company like Microsoft saying, we're using the latest product and we're the first person, this is for those of you that are older. You will remember Intel. Back in the 2000s, it's a marketing case study. So my degree is in marketing, and I don't like marketing. I just know this case study because when I was going to school in 1993, I graduated in 95. But when I was going to college, we were looking at stuff like this. And I constantly would read case studies, even after college, on marketing. One of the things that I wanted to do was my own marketing agency. I just never did it because I wasn't, I was more interested in stocks. Let's just say that. More interested in making sure that I had the money, less interested in risk in my corporate and career, blah, blah, blah. But Intel was a case study through the 2000s because from a marketing standpoint, what did you have with Intel? You had a company that had a product that nobody ever saw. Remember, you don't see chips. You never see a chip. And so when I was going to school, this was a case study because they came out with those stickers and it said Intel inside on the PC. And so that was how they conveyed quality. When you have Microsoft coming in and saying, we're running Blackwell, this is the Intel Inside, okay? And you can Google it when Intel Inside marketing campaign started. But look at that trajectory. This is a monthly chart of Intel. Okay, I'm not saying go and buy Intel. I am saying we may just be at the beginning of Intel having that Intel inside moment. And you're at 134. And so I want to liken it to that. I don't know that this one can go to a $6 trillion market cap. I just don't know. Again, it's one of the top companies, but they've got pricing power. Again, pricing power is huge. If Microsoft is willing to throw it out there, what do you think Google and Amazon are going to do? They're going to buy Blackwell. Because if Microsoft is saying, hey, we outpace these guys, we've already got it installed. What are Amazon and Google going to do? They're going to throw it into their their cloud. Okay, that's what Jensen's talking about when he says demand is insane. Right now, the valuation, it's crazy. We talked about not buying Apple at 30 times earnings and Costco at 50 times earnings. This one's forward PE 46. It's nuts. But with the growth, their PEG ratio is 1.28 going forward. Okay? They have pricing power. Look at their profitability. Their gross profit margins, 75%. 75%. That's huge. When you look at their growth, revenue year over year, they're growing 194%. That's going to be harder to keep that pace alive. That pace is going to be harder, which will weigh on the stock. It's not like they're going to lose money. They're not going to go negative. They're going to go positive. But that percentage term is going to be hard to keep up. But I do say we are in an AI market, and I think this is one of the ways that you could play this. Another way that you could play this is Taiwan Semi. Taiwan Semi's Q3 sales seen to beat estimates. September revenue surges amid AI chip demand. Who's making the chips? It's Taiwan Semi. Wall Street says it's a strong buy. They have a $213 price target on Taiwan Semi. $213. Okay, this one they chased it up. It pulled back. You have an opportunity to buy this one down. Their earnings are coming up. It's ranked number one out of all of them on semiconductors. Semiconductor stocks. So this even beats NVIDIA. NVIDIA's number 10. Micron's number 7. Marvell, again, this is on quant rating. If you want to look at market cap, NVIDIA's by far $3.26 trillion. Broadcom's only $844 billion. I have Broadcom as well. I think Broadcom's a buy. When you look at Broadcom and you look at Wall Street, 42 analysts cover it. 192 is their price target. I'm in at like 130. Okay, this is the market that we're in. It's an AI market. Now, how do you play some of this stuff? If you want, I'd argue SOXL. SOXL is the bull on the semiconductor. It's 3 times levered. Okay, my algorithm over the last 24 months makes you 321%. 321%. What do you get if you just bought and held this one? 306%. You're happy. You win 46% of the time. You want to know why? Because this one is bottom left to upper right. And you've had a pullback. And on the weekly, you've reset everything. Go and buy SOXL. Again, if you think this earnings period that we're going to have a blowout on semiconductors again, SOXL is your bet. It's triple levered ETF. What you could do is buy some of those other companies like Taiwan Semi, like Broadcom, like NVIDIA, like AMD. And you could just lever it by going SOXL. Or if you want to lever it and give yourself protection, SOXS, which is the downside. So if chips pull back in Q3, then you're protected on that side. So I wouldn't suggest it. It's a good way. This is how they use options. I don't do that kind of stuff. I'm a perma bull. Shoot me if I'm wrong, but I'm a perma bull. Again, stocks only go up. But yeah, Broadcom, Microsoft, it's all. The other thing that we're in is a GLP-1 market. And this is Eli Lilly. Medicare coverage of obesity drugs could raise federal spending by $35 billion. Where do you think $35 billion is going to? It's going to Eli Lilly. It's going to Novo Nordisk. Okay, those are the two stocks that are up here. Eli Lilly at 913. I said buy this under 900. Just buy it under 900. Their earnings are coming up. The algorithm got you in at $898. Okay, their earnings are coming up October 29th. On a weekly, have you reset yourself? Not really. I mean, this one, the MACD is still super high. The RSI is at 58. But the last time the RSI was at 58, you were trading at $369. $369. And you're at 913 right now. So in my mind, I think that's where we are. You know, Medicare coverage is going to cover it by $35 billion. Whose pockets is the $35 billion going to? It's going to Eli Lilly. Now you want to know another opportunity? Roblox, Hindenburg Research, short call. These guys just throw shorts out there. They're the ones that did SMCI. They may have a case, but I would argue this is in the core portfolio. The reason this is in the core portfolio is when this gets under 40, it typically goes back over 40. And we can take a look at a weekly chart of this. Yes, it got up to 45. You were probably feeling good. But look at the times where it's pulled back. Once, twice, 3, 4, 5, 6 times it's pulled back. And that's just since March of 2022. So it's a year and a half. Now the 4-hour algorithm makes you 17%. Buying and holding makes you 15% over 2 years. I would argue that you could play one when the algorithm gets you in. If you don't know anything about charts, okay? Say you know nothing about charts. I will tell you right here is a Class A example. Your Bollinger Bands were cinching up. You had this big candle right here on September 26th, which is a 6.2% down. It opened at 47. It closed at 44. 6%. You lost confirmation on the 9-day. Your Bollinger Band started to cinch up. Your MACD was going down. Your RSI was at, let's see, it went from 66 to 44. And you were over 45. Sell it. Sell it. I mean, it's just as simple as that. Now, you see yesterday's morning candle was up 6.73%. It went from, this was yesterday, opened at 37, closed at 40 in the morning. Then the afternoon, it was up 0.97. So the short report came out. It took it down from like 46. And again, we're just on our way down. Doesn't mean that we're in a turnaround, but any reaction in the market is an overreaction. Okay? I like this stock and I like it under 40. And I think you could even buy it here at $40.34. And just hold it till it goes to 45. You know, again, you want to find stocks like this. If the Hindenburg research is correct, you're going to lose. Set your stop loss at like 30, 38, 39, somewhere around there. So if you lose a little bit. But then you can put that money back in and try and make more money. Again, a stock like this is a Tinder date. It's not a marriage proposal. This is something that you're just kind of going out and you're just kind of laying the land, just feeling your way around. You don't know this stock. This is one that you trade. So let's talk about Seeking Alpha's top quant picks in information technology. The information sector, which holds 29.5% weighted S&P, giants like NVDA and Apple. So what does the quant say are the top sectors? That's what this thing says. Seagate Technologies is the top one. Just FYI, Seagate Technologies is the top one. This whole article points out opportunities in the technology sector where stocks haven't or they have run up and they have more upside. This is a great article. I read this one. I just can't show it to you because they get mad. Now, Wells Fargo, I can show you this one. Wells Fargo tweaks their signature picks. Okay, sells Amazon and Constellation Brands, while upping Microsoft. We had a downgrade of Microsoft yesterday or a couple of days ago. Amazon, we're selling 7.6% of our Amazon as the stock was downgraded this week to equal weight by Wells Fargo Ken Gorelski on limited visibility into further positive estimate revisions. Constellation Brands, we're selling 3.5%. This is how you manage a portfolio. This is their signature picks list. This is how they manage a portfolio. They don't sell it out because they do think that these are their signature picks. They're just saying, hey, we've reached a certain point. We're comfortable with trimming. Microsoft, we raised our Microsoft position from 3.9% to 8.9%, flipping our 2.5% stock underweight to a 2.5% overweight. Avalon Bay, we raised our Avalon Bay position 2.1%. That's a REIT. Vertex Pharmaceutical, we talked, it's a GLP-1 market. We raised our Vertex position from 3.9 to 4.9. So again, managing the portfolio is important. We're just heading into earnings season. There's a good chance that you're going to see things start to move. And I don't know which way we're going. Because again, if you go to SPY, we're back at those all-time highs. You need earnings to expand in order for this market to continue higher. And I'm a little bit nervous that we don't get that expansion. But if you don't get that expansion and you pull back, if you don't hold 565, you want to start loading up below 565 because I do think we end the year higher without a catalyst to the downside, by the way. So just a reminder, I will put it, there's a Spotify. I did a video about the import strategy, and you can watch that one on YouTube, blah, blah, blah. And I'll put the response in there because we're on to social requests. From Facebook, this is from Scott. He said, sold half of my VRT today. I'm up 25%. It looks to me like it's at resistance. What do you guys think? VRT is one that I've brought up. I think it's an alpha pick. It might be an alpha pick. I'm not quite sure. But VRT is a stock that I brought up before. And I bought. I just looked it up beforehand. My average purchase price is $93. I thought $90 was a support level, so I wanted to add at $93. I think I bought 100 shares throughout this period. But my average purchase price is $93. It's sitting at $106. What do I see from this standpoint? I see that we are looking at $109 as a previous all-time high and at a potential pullback up there. I see that potential pullback. Am I willing to hold on to it for $3 and see this one drop all the way down to 93? No, I think Scott did it right, because then if we go over to Seeking Alpha and we go to VRT and we can look at this one, okay? 52-week range. Where is it? 3460 to 109. Okay, and you're at 106. They report earnings soon. We can see the quant says it's a hold. The valuation, again, it's like NVIDIA, 41 times earnings. Their PEG ratio, 0.86, so you're counting on growth. Their revenue growth, 12% year over year. Let's go to their profitability. Do they have pricing power? Yes, 36% gross margin, 31% against the sector. Their momentum, A+. So it's a good company. Let's go to Wall Street. There are 15 analysts that cover this. That's not a ton. But I will tell you, their average price target is 106. 106. Yes, they chased it up. And yes, it pulled back. They didn't reduce their price target. Now, with their earnings coming up, do you want to hold on to this at all-time highs going into earnings on October 22nd with the MACD up that high, with the RSI that high? Well, let's take a look at the weekly, because what happened with the weekly? The MACD reset and the RSI reset. And you're heading into earnings at that all-time high. I don't think that's a bad play. I think that's a great play. In fact, I may do it as well. The problem that I have is that I bought this in a brokerage account. And so I identified this as a long-term buy and hold. I'd like to get rid of it and just pay, again, at all-time highs. I'd like to trim it. I just don't know my tax situation, so I've got to do some additional work on this one. But I do think that's a great suggestion, Scott. I do think that the trimming 25% of it is fantastic. I mean, I can't argue with that one. If we see it break down a little bit, this is what I've been talking about Palantir, is that as you get towards that $40 range, it might pull back. It hasn't stopped. So you don't want to get out of it. You don't want to get out of a stock by 100% when you're on the upside of the 9-day and you're trading at the top of the Bollinger Band and it has earnings coming up, maybe a potential catalyst because their growth is so good and it's expected to be good. You don't want to get out of that. You just don't want to get out of that. Another one, Trey from Spotify. Do you think Powell still has room to run? POWL. I've gone over this many times, okay? I can say this. That green line right there on Powell is a long-term trend line. Okay, we can look at the weekly and we can see that long-term trend line. Do I think it's got more room to grow? I don't know. I mean, your guess is as good as mine, but if we go over here and we look at Wall Street, 2 analysts cover it. They have a 194 price target on it. Now, the quant says it's a strong buy, and it doesn't have, its valuation. Sure, it's a little bit expensive, but that PEG ratio with their growth is amazing. 44% revenue year over year. When you look at profitability, 25% gross margin. 31% is the sector. So levered free cash flow, though, 16%. That is a good, well-run company. And 252, does it have more room to run? I don't know. I mean, I've seen the volume pick up on this one. I'm seeing the RSI. Again, that trend line provides you support. So if you're looking at potentially, here on earnings, where's that trend line cross up? 192 would be your support. It just ironically looks like it, if we put that line across there at 192, boom, 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 we say, okay, we're going to go to about 192. I'm going to take this one out there. This is an alpha pick, by the way. And look at where alpha picks picked it. They picked it and they're up what? We'll update this one. They are up now 359% in 1 year and 4 months. This is an alpha pick. And again, I can't enunciate this enough, okay? VRT was an alpha pick, I believe, as well. I think it was. But if you go over here to Linktree, LINKTR, the second one is this bundle up. This is the best bundle. You can get alpha picks and Seeking Alpha Premium for $639. That is a $159 savings. $159 off. You get the bundle. Limited time. Sign up. You get a full year. And you see how I just go back and forth between Seeking Alpha. Alpha Picks is a secondary service. And the reason you want Alpha Picks is because of this return. Okay, if you just want Alpha Picks and you don't want to do the research, 139% is the return versus the S&P during the same time period returns 38%. It's 2 stock picks, one on the 1st, one on the 15th. They tell you when to sell. They go over multiple sectors. I think Sprouts Farmers Market was one where it shocked me. It's up over 40, 50% over a few months. Some other ones that shocked me, Modine, MOD, that one. It shocked me. And there's a few more. SMCI was one that they bought in October 2022, I believe. They still have it in their portfolio. They're still up on it. They've doubled down on it. I think they had some trims in there as well. But they tell you when to sell. That's the key. Okay? If you want to do your own research and just look at the quant like I do most of the time, $30 off your membership. Okay, all of this is on Linktree, LINK. The bundle's the first one, Seeking Alpha Premium's the third one, and then the fourth one is Alpha Picks. The way I rank my Linktree is the top one is the tool that I think you should get. It's Trendspider. It's the number one tool that I use. The second one is the bundle because that's the best of the best. You're saving money. The third and the fourth one, they're ones that if you want to get them, individually, you can get them. But all of these tools are great. And the fourth one is Webull. Okay, that one, I just trade like a sports betting app. I went from $1,000, I'm at $9,000. It's MicroStrategy, it's iBit, it's NVDA, it's SOXL, triple leverage DTFs. I've made quite a bit of money in Webull, and I just play it. Again, managing a $1,000 portfolio is significantly easier and significantly riskier than managing a multi-million-dollar portfolio like I have in Fidelity. Managing that portfolio is significantly harder, and I'm much less willing to take the risk that I am in Webull. So while I'm happy that I, 9 times my money in Webull over just a couple of years, there's no freaking way I'm doing that in my real portfolio. You have to protect yourself. Remember yesterday we talked about how this guy went from $88,000 to $450 million back to zero. I'm not going to zero in my Fidelity account. I can guarantee you that. Will I go to zero in my Webull account? I could. I mean, that's how risky it is on a 0 to 1 base. Powell, is it going higher? I don't know. You're at all-time highs. So Trey, your guess is as good as mine. The fundamentals are there. Their earnings are coming up on December 2nd, so you don't really have a catalyst. The MACD super high on this weekly. The RSI is at 71. 70 freaking 1. Yeah, does it have room? I'd have said down here at 82, When the Bollinger Band cinched up here, I would have guessed we were out. I'd have guessed you were out here at 192 when you went outside the Bollinger Bands and pulled back. I said this was going to be the pullback. It wasn't. So I'm not the best guide on this one. But does it have still more room to run? Your choice is yours. Ryan Picola, Rocket Lab, crazy run. NASA contract, very volatile. What's your algorithm say about this? RAKLB. So we're just going to look at, because you don't care about the fundamentals on this one. You don't care that they're not making money. You don't care that they're spending $20 million on a freaking rocket that isn't even launching. You don't care about that, Ryan? Rocket Lab, algorithm had you in at $6.62. The algorithm makes you 88%. What if you get bought and held 24 and a half months ago? You make 127%. So I would say, yeah, it's great to buy and hold. Would I have ever guessed that this one would, 127% over that amount of time, 24 months? Hell no. Doesn't make money. Doesn't make sense for me to put money into a stock that's not making money. Could I trade it? Absolutely. The 4-hour algorithm provides me an opportunity to make 88%. I only win 38% of the time. Average win 21%. You can optimize the 4-hour strategy so that you can protect your downside a little bit more. You can do all of that when you have Trendspider. So what does my algorithm say? My algorithm says buy it. But would I buy it now? Hell no. You're on the downside of the 9-day. You've had this run. Your average win, again, is 21%. If I look, where are we up right now? We're at 40%. Am I buying into a 40% run when the average win is 21%? Hell no. Hell no. So, I mean, again, if you want to use the algorithm, you can use it. It takes emotion out of this. But I actually use it with some emotion. And the reason I use it with emotion is logically, I'm not buying into this one. I think Simon from 7 Investing, he did a great job in convincing me this has a great opportunity to make it. But am I getting into this one while it's up that high? No. I think if you get into this at $9, set your stop loss at about $8.14 because that's the previous high. I think you're going to see this one pull back, but your guess is as good as mine. It's trading on the upper side of the Bollinger Bands. Your MACD's high up as it's been on the above the oscillator. Your RSI is at 69. Now let's talk about some scans. XLK. We talked about the top XLK stocks for Q3 heading into earnings. XLK cross up. Okay, this has been underperforming. We talked about previous highs. XLK, the previous high back here in July, it was 238. I'm sorry. Yeah. Let's see. Yep, 238.12. 238.12. So you've got some upside. Now, the algorithm got you in here at 213. Do I think that it's crazy to go to 238? No. Because you know what? If you look at XLK and you go to the holdings, I think it's 20% NVIDIA. Let's see. 14% Apple, 13% NVIDIA. So it's 27% between those two. And then you got 13% Microsoft. And then 4% Broadcom. XLK, in my mind, I do hold a lot of XLK. I like this one. It has underperformed, I think, the S&P. Let's see. The S&P year to date is up 20%. XLK is up 18%. So it is underperforming. I do think that this one comes into its own in the third and fourth quarter. So would I buy it here? Yeah, it got another leg up. So the algorithm, even though you're already in, it tells you, hey, you got another leg up. That's why it shows up on a scan. Uber. We talked about Uber yesterday. Uber had you out. I said it was going to get you in at 76.15. Netflix, I would say buy under $700. It's at $721. You had an opportunity to buy this in September at $680. I would say wait for this one to get under $700. If it doesn't, again, the third quarter, these October earnings are typically not great for Netflix. When you look at October of last year, we pulled back. A little bit right before earnings. We're heading into this one strong. I think you're going to pull back. If we look at the previous October and we look at that one, you were heading into that one down. You're heading into this one strong. I would assume that we're going to get under 700. There's going to be, the street's going to say, you know what? It's just too much of a run too soon. I think it's going to pull back. Dell 120 entry. See that trend line right there? It broke the trend line. I think you're going to start using that. If we break through that one, I think it's off to the races, back up to 160. Shopify. We talked about Shopify being over 80. It pulled back a little bit. Got another leg up. I mean, this one just keeps resetting itself. When you go to the weekly and you look, that $80 mark is where the $200 the 200 day is. Now, I would trust that green line to provide you some support because we broke through that downward trend. Okay, that downward trend of resistance, we broke through it. I think you've got more room to run. It is expensive. Understand it's an expensive stock. So use Seeking Alpha to go and look at the expenses. Costco, under $900. I think you're okay. It's expensive. It's that long-term trend line, that green trend line is right on a weekly. You're right up against it. Again, you can see the buys there because I've got alerts to buy this one. I've wanted to get back in. I'll probably just get back in under 900. It is incredibly expensive. It just is. Goldman Sachs. This is all the core portfolio, by the way. Goldman Sachs, 494. You have an entry. Look, the MACD's right on the oscillator. Their earnings are coming up October 14th, next week. So I like this one. Is it overvalued? Not particularly, but if Friday banks come out and Jamie Dimon of JP Morgan comes out and says some stuff, this one might be a problem. The revisions, you have 2 up, 13 down. It's not great. I mean, the Wall Street target on this one, they say buy. The Wall Street target is 526. So it's only a 6% upside. It's not a huge upside, but the algorithm says, hey, get into it. So I would probably be learning to get into it. One that I added to the watch list yesterday because we talked about it, Affirm. I think this is one that you could absolutely start trading. Just like with Roblox, it is not in the core portfolio. So understand, it is not in the core portfolio, but Affirm has this nice little support level down here at 39. We're going to go back to a daily. Let's go. Why is Trendspider holding up here? We're going to reload it, and we're going to go to Affirm, and then we're going to go to the 4-hour algorithm. Where is my 4-hour algorithm? There it is. And Affirm right here. Run it. There we go. And there's the 2 lines. I think you could trade this between 40 and 51. And their earnings are coming up, let's see, November. So you don't really have MACD reset itself, RSI at 58. Just understand, Affirm is an expensive stock. But remember, Apple turned over their buy now, pay later to Affirm. Amazon with their Prime Day, it's all on Affirm. It's the number 1 financial transaction payment processing service. As far as PayPal's number 2, Toast is number 3. All of those I like. PayPal has had quite a turnaround. It's not in my portfolio. I sold out at 66. I ain't got the diamond hands. So there is a super, super long list of scans today. And the scans are in each newsletter. So if you just go to the newsletter and you go to the very bottom, what I do is each day I scan for entries in my 4-hour algorithm. And so if you want the chart, get Trendspider. You can just click on a link, put in that stock symbol and scan it and see where it enters you in. Okay, yesterday we had MicroStrategy, MSTR. MicroStrategy on the 4-hour algorithm. This would pay for Trendspider itself. MicroStrategy on the 4-hour algorithm over the past 2 years, 24 and a half months, makes you 1,152% versus 814% if you just bought and held. You win 48% of the time. Got you in here at 125. Aren't you happy? Because, if you just listen to the algorithm, like I said, and you had my scan, if you just had my scan, you're up 50% in 28 days. 50%. Yes, I was buying. Were you? Even if you bought back here at 139, you're still up. You didn't get out with that 7% gain, or you didn't get out with this 0.3. You're still up. Again, this is a stock that's bottom left to upper right. It is a good stock to hold. Is it overvalued? I posted a thing in there yesterday. So I like this. Again, 3 things that I sell. It's basically Trendspider, it's Seeking Alpha Premium, and it's Alpha Picks. Join Webull. I don't sell that one. I just say, hey, I like their app. As far as charts on your phone go, that's the best app system. Robinhood is absolute trash. If you're trading on Robinhood, they're going to stop you trading stuff. They're going to charge you fees. Webull has none of that stuff. It's a much, much better platform. And the bundle. So if you have any questions, hit me up. Remember, if you sign up for Trendspider, just email me up here in the upper right with a screenshot of your account so that I can send you the 4-hour algorithm and all the algorithms that I have. If you have Trendspider already, I will post a link to the actual 1040 that Fred had suggested, so you can see how it is. You know, again, 1040 on this particular one. I don't know which one this one does. Oh, MicroStrategy, you make 51%. Buy and hold 333%. So you can customize it as much as you want. But again, if you have any questions, hit me up. Okay. See you guys.
Every morning I wake up to the sound of the trading bell. My heart starts to pound.